step into the game. We're talking wood and grain. Charles bring the heat on Southern Yellow Pine. Mascot U.S. species, all is on the line. Gregg with the spruce, keeping knowledge defined. Ashen moderates, drops the facts to the booth. We on the buy, the sell ain't no hidden truths. Economics and trends, we got it all so clear. Lumber Word Podcast, best believe we're here. If you wanna make more, get in on the score. Join us every week, you'll be hungry for more. Love a big team, though. Whoop made known. Such rank Charles, slide, plum ram known. Open to the scene, for the lumber supreme. Charles laying down facts with that southern yellow bling. Mac got that U.S. swagger like strong timber beams. Gregg's insights on spruce, rewrite the themes. Got the buy side talk, we're stacking that flow. Selling knowledge, every week we still a show. Join the Lumber Word crew, let your business grow. For the sharpest minds, here's where the place to go.
Everybody, welcome to this week's episode of the Lumber Word. I believe it's episode 156, and we're recording on February 11th, 2026. Interesting market going on in lumber right now. We were really bullish. We were really bulled up last week. I mean, our necks were flexed. I mean, our leashes weren't fitting really well. And I mean, we were like doing the full frontal crab flex on the market last week. Do we still all feel that way? It seems like, well, it seems that the market in Charles, you can point to the Carolinas slowed down a little bit due to the snow. Is that the real reason it slowed down? Because I'm still getting a lot of inquiry on stuff. People who cover stuff. And in the last half an hour or so, starting to see some things. So kind of getting a mixed bag from people on what they think. You know, buyers are normally they think the market's going to zero, a lot of them, and are throwing bids out on stuff. But where's everybody's head at?
Go, Charles.
Markets are very disconnected. Nobody's really convinced one way or the other. You have parts of the market that want to be in it and will stay in it, and then you have parts of the market that don't believe whatever's happening is happening. But if you look at last year this time, and just use pine as an example because it's my bread and butter, but the price appreciation and what have you was compounded when treaters got in and threats of tariffs on, tariffs off, yada, yada, yada. Now we have tariffs. Now we have treaters. Now spring is going to spring at some point. But what does that mean? I don't know. I'm just happy we're on both sides of it.
We're not, Matt. We kind of we're doing a little bit of a conversation before we clicked on the live button. What's your feeling on things?
It's kind of it's two-faced market. So for me, my truck business is really good and my rail car business is really slow. And so, if you pulled the office and you're trying to sell a bunch of rail cars for sawmill production or just stuff that you have bought ahead, it's probably going to take a lower price than what you think you could have got for it last week. And there's going to be some negotiating maybe on tally and price. And so, but I mean, I'm talking like maybe $10 or $20 below what you could have got for it a week or two ago. We're not talking $50, $60, $100 discounts. I mean, at that price, you're running into number 3, and I would just go out and buy every stick of number 2 that I could get my hands on and just sub it for number 3. So right now there's some trepidation or digestion, whatever you want to call it, in the rail car market, but there's a lot of trucks being moved around in the areas that I'm familiar with, and people seem to need it right away. So that tells me that my overriding opinion about the market being tightened up and tensioned up and being a bull market for the first half of this year is probably accurate. I'm going to stay with it. I'm going to keep buying lumber until that changes, that behavior in the field changes. And I haven't seen that change yet. I'm getting swarmed with orders on trucks right now, and they're completely capitulating on both price and my tallies. Like I tell them, this is what I can ship. I got this if you want it, and they buy it. So, a tale of two different realities going on at the same time. I do think that the wholesale community is light in general, and that's another reason why I'm getting so many of these orders on trucks. I just don't think there's a lot of inventory laying around. That's my gut feeling. So we'll see.
Yeah. I just got a text while we were talking from one of the mills. They said the large trading houses, we know who that all is, are in buying right now, and especially 2x4 16s, right? Because 16s went from $570 or $670 down to $510 or 15 yesterday for two.
Did they
better.
really?
Yeah, or 615.
Huh.
615. But that's an $80 move in an air pocket.
I heard a bunch of 9s are getting sold all of a sudden. One of the Eastern mills sent me a note this morning, just said they sold 2 million feet of 2x4 104 and 5/8 spruce. So I don't know if jobbers are covering or if guys just want to get long again. I don't know. You got any thoughts on that?
I mean, I think that, my sense is that, the market had that strong start to the year. And then we had 3 weeks in a row of, some pretty nasty weather, east on the eastern half of the country. And that kind of put a damper on stuff. I mean, I got a text from somebody that, had reported to me that, there's a lot of business that was taken in the early part of January, like out in the field, kind of at those January numbers. So I think that there is a lot of underlying support under these prices. I mean, the big question, I mean, and I do, back to your original statement, Ash, 3 weeks ago, 2 weeks ago, we were really bowled up. I mean, I think I said, phone up NASA. It's going to be a moonshot. Oops. Oops. That's why we have the disclaimer out there. I mean, I still think that we have not seen the high here in the first quarter. And, Matt, to your point, if the field is light on inventory, and so Texas, as the weather snapped back really quickly, I think we'll have to watch and see how the Southeast, the Middle Atlantic weather bounces back, and if that prompts a lot more covering, then maybe this is just a short-term correction on this and the moonshot's right. I mean, we were pretty negative last week with Dustin on, so yeah,
blame him.
I mean, here's there you go. Here's my observation on this, and how last week I was saying I get people calling looking to work, and I'm like, well, why would you be doing that? You're at a great company. I told Gregg, I sent you an email the other day about somebody, same situation. This is happening on a regular basis. And I've come to the conclusion of this. A lot of what used to be our competition and kept a lot of inventory on the ground aren't keeping inventory on the ground anymore because they had a bad year last year. And I always look at the position of what we did. Gregg kept us in really good line. We were hedged all last year. So our experience was, Matt, you stay hedged.
Yeah. Our experience
was, we had a great year last year. And all these people are calling me, telling me how bad of a year they had, or they're not making enough money, or they got no inventory. I'm like, well, okay, that's not my experience, but maybe that explains why there's not as much wood on the ground. Mills that never wanted to sell us before are calling us, willing to sell us. Hadn't sold us in 5 years. And so I look at that and I come in today like, oh God, I got to sell something, being bearish. And it's like, my gut feel isn't bearish right now. Mm-hmm. And it hasn't been. It's been, the market got quiet, but when I talk to customers on the phone, they're trying to convince me the market's going down. And then I hang up the phone and I think, I'm like, you know what? They're still short. They're sending me the same inquiry. They're very convincing, especially the guys that got the people that are older in this industry. They're really good at messing with your mind, right? It's like, I'll be able to buy those $100 cheaper. Well, bullshit, you will. Right? It's like you shouldn't have sold them $100 cheaper at the end of last year. and I'm sorry you're losing money, but here's my feeling. I think we have a lull. I think we still are going to run another $50 to $75 over the next 30 days.
Yeah.
I mean, that's my feeling. And I look at futures, I pull up the commitment of traders report, and I chart the industry and the funds. The funds are almost to the end of the longest time period that stay short, and they've been covering their shorts, and the industry's been getting out of their longs. And most times when they do that, they have an underpinning in the market. right? As far as the price goes, we have seen some dislocation. That's not the right word. It was hard to get a price on anything this week because nobody was selling anything. So nobody had any price discovery. I was talking to a mill yesterday. I'm like, well, there's 2 other mills that are $50 under your number because they still had a high number from last week that they hadn't sold at, right? And now everybody's starting to adjust a little bit on spruce because there's some little trading going on.
Yeah.
Charles, like pine, what are you seeing on that? You guys had a good up move for 2 months. I mean, is pine slowing a little bit and a little hard to get price discovery?
I mean, price discovery is rough, right? I mean, mills they've had a rough couple of years, so they're trying to stick to their guns. You just got to find pockets that make sense. You got to find somebody that needs to move it, that actually wants to transact business at volume, right? And I don't think there's a lot of people that want to do it because we're right on the back of treaters stepping into the market and historically speaking, market appreciation as a whole for at least another 45 to 60 days, right? And then it kind of settles and might give some back and establish some new levels, but there's not a lot of people, not a lot of mills that are eager, right, to go to market and move stuff.
The lumber market can be unpredictable, but with the right tools, you can make confident decisions. Fastmarkets is the trusted home of the Random Lengths Weekly Report, providing detailed pricing for over 1,600 products, including softwood lumber, structural panels, and more across North America. As for hardwood markets, the Hardwood Market Report is your go-to source for pricing benchmarks, market commentary, and in-depth monthly insights through HMR Executive. These resources give you clarity in a complex market, helping you stay informed and prepared. Fastmarkets Random Lengths price assessments are derived from verified price inputs collected via online submission forms, authenticated physical documentation, and interactions with buyers and sellers across the supply chain. All data is evaluated within Fastmarkets' proprietary assessment platform, Mind, in strict accordance with our published methodologies. Each assessment undergoes a rigorous approval process prior to publication. Key benchmark commodities are subject to independent third-party audits to ensure alignment with Fastmarkets methodologies and compliance with IOSCO principles for price reporting agencies. Get started with Fastmarkets today. Visit fastmarkets.com/lumbertalk to find out more.
I mean, are you able to buy stuff at heavy counters right now or not?
I mean, it depends on what the item
like
is.
4-inch?
I mean, we're buying. Do what?
2x4
No,
16s.
No, 4-inch is still tight. 14s are still tight. 12 inch.
So east side printed down midweek. East side 4 and 6 inch printed down on the index.
Yep.
And 5 and 10 on central. Are those representative numbers of where stuff's trading at?
Very, very close. Yes. The one thing that stands out to me, I was talking to Alex this morning. If you look at the composite though, from last Friday, you look at 2 before 2 and better, right? You got 430, 437 Central West, right? Respectively. And you got a 495. I got to think that historic spread between those zones, obviously east side is going to be the more expensive zone, but you got, I want to say that the average spread from a historic standpoint is like $35 to $45. So when you're at 60, that kind of signals something too. I just don't know. I don't know what cost, because right now a lot of what we're doing is 6 and wider, and we bulked up on 4-inch in the middle of December, thankfully. And raw material from price spread from the middle of December to what it is now and what we do, $100 all day long.
What's 2x6 doing?
2x6 is tough to pin, right? I mean, if you can pair it up with some other stuff, you can try to get some discounts, but you got to find the right mill that wants to play ball. It's not a widespread issue.
So just as another aside, is I do see that March CME yellow pine is $465, so it's a $20 discount to the index right now. What's the spot cash price on that today, Ash? Do you have that?
On 2x4 pine?
2x4 pine, yeah. It's the daily number.
I didn't pull I didn't pull the daily yesterday, but I was just looking at something else when you said that, Greg. And Matt, this kind of ties into all of us here. What I have noticed is, 2x4 number 2 pine that had been replacing in Texas 2x4 number 3. it's too expensive now. So 2x4 number 3 all of a sudden is taken off, and I've gotten more inquiry on number 3 spruce than I've seen in a long time, and have guys calling now wanting to do forward pricing and lock in stuff on utility and low grade, because all these pallet guys and everybody finally are getting their raw product prices are increasing pretty substantially in the last few weeks here. I mean, Matt trades. Gregg,
just to your point on the low grade. I mean, we're starting to see the push up in that, when the production falls, right? I mean, the marginal amount is more disproportionate the lower grade you are, right? I mean, Matt, if you make 75%, 2 and better, and 15% number 3, and or in the balance economy, you cut production by 25%, you feel it first on that lowest production item, which is the low grade, which is what we're seeing right now.
There's also been an improvement in the export business on the low grade, and then the normal users in the United States, their demand hasn't changed. I mean, so think about the country, what percentage of our lumber goes into the home center business, what percentage goes into the retail trade, and what percentage goes into, cut up shops, industrial, the universal forest products of the world, right? There's lots of those guys out there too. They make up about 30% of the marketplace on consumption. And so their demand, even if it's flat year over year, it's still there. Well, if there's less of the raw material coming out of Canada, which there is, and if there's less raw material coming out of the South, which there is, where's it going to come from? It's not going to come from the U.S. West. We just don't make a lot of low grade. Our mills are all optimized up to the yin yang. And then, we just don't have the capacity to meet that supply shortage. And so you're seeing a race on number 3 in utility prices and economy prices back up. They're up $100.
Yeah, and
maybe it's going to go another 50 or 100, before this is all said and done. I've already attained on actual sales on trucks, the highest price I've gotten for 2x4 16s, 18s, and 20s on utility and number 3 in the last 2 years. And it's February.
What are 2x4 16s trading at in utility in Texas?
$575.
I mean, that's right. You're damn near 2 and better. Some euro prices.
Right. Which is why I said, I sold some 2 and better premium at $705 for 16s today. So, I mean, there's some real time data for you. There's still a spread between those items. I mean, if you could find me those $615 premium 16s, I'd buy a bunch of those. But, if 2 and better lumber, whether it's hemp, fir, whitewood, or spruce, gets down into the low 500s delivered down there, I'd probably just buy it and use it as a dual inventory. Especially if it was heavy on the long length type stuff on the 16 and longer. So it's a challenge to buy low grade right now, and it's easier to buy 2 and better. There has been a few times in my career where 2 and better and number 3 utility kind of merged. It would be really strange to have that happen in February, right?
Well, Matt, to your point is, if you look at, for most of last year, the spread between high grade and low grade was as wide as it ever got. And, the low grade just sat there. So you've just done a reversion to mean. Wouldn't surprise us for that spread to tighten out. We used to look at when you were 100, when number 3 was 100 to 125 under.
Yeah,
that was a basis trade buy.
Oh yeah.
And the long-term average is more like 35 or 40.
Ashley and I used to joke about this back in, in the olden days. I'd call him up and say, I just bought 75 cars of utility. And he's like, that's a good idea. It was like $110 cheaper than 2 and better. Well, that was like a home run back then, right?
Yeah.
And then the last few years, 110 was no big deal. That was just kind of normal.
And it got even wider.
If it gets down to 50, 50 used to be sort of the historical average between a graded product and a utility number 3 piece. So
Matt,
we're heading back there.
One thing we're noticed, talk about on grade, and Charles, maybe you can look. So we've noticed a lot of pallet manufacturers and people that sell them quietly buying 2x4 84-inch SPF studs and number 2, because when people are cutting 40-inch and 42-inch runners for pallets, it's cheaper than buying the 8-foot utility. They're buying 7-footers. They're buying the short studs, which were plentiful at most of the Eastern mills, right? Because it's a cheap product for them. And I saw more get picked up today, right? And that's so you are starting to have less and less. But I guess my point is, once utility starts moving, it should kind of underpin everything, obviously, right?
It'll help the mill sales average.
Charles, this is your world. You live in cutting stuff up. Does that make sense?
No, I mean, it makes complete sense. I've actually seen more requests for 84 shorter 2x4 and low grade that some mills will cut as a downfall. So the bell rings true for here for pine too.
How much euro is on its way over here right now? We've got a little bit higher prices. There's a wild card there, and they're paying a tax, aren't they? A little bit of a tariff on that.
Greg and I had this
10%.
Conversation this
10%.
morning, and you know how we had Dustin on last week, and we were talking about how it doesn't look like there's a drop. Greg, you kind of summed it up real good. You said it was coming from mostly Swedish wood.
Yeah. So what the word I have in conversation is that shipments from Germany are way down. In the down to somewhere between 1/3 and 40% of what the run rate was for most of last year. But apparently, from what I gather, and it's I'd love to we probably need to get somebody that knows a lot more about this than I do on. But apparently the difference is being made up by shipments from Scandinavia. We do have reports that there's a lot of lumber sitting in ports, but that it's been there for some time. So, I guess to answer your question, Matt, in aggregate, it sounds like, that's the same amounts coming, maybe a little bit less, but it may not all be offering on the market on a regular basis.
Yeah.
Yeah, it's what Greg said too, Matt and Charles. Like when we talked the ports, the port has a lot of lumber in it, right? I guess, but my question is, how much is it turning, right? Because I think there's some mills that then go to distributors to sell for them, and they tell them when they can sell. That wanted 700 3 months ago, 4 months ago, didn't get it. Now want 650 on all their 6-inch and something, and didn't get it. And I think there's wood's been sitting at those ports since Q3 of last year.
How long does it take to get spoilage on portwood?
Well, right now you're okay.
It depends.
Yeah.
This time of year, I should say. It's probably a milder climate from November through February, right? What happens if that stuff sits till April or May and it's 6 months old? You going to have mold issues again? We're going to have torn paper and black lumber. We ran into this a few years ago. Remember when there was a glut of euro that came in? Was it 2.5 years ago in the first quarter? And a lot of that stuff just sat, and it got sold for $220 at some point. You know what I mean? Why would you do that? Why would you do it again, I guess is my question.
I think you just forget and think about it's a commodity that sitting at certain parts in the world has a lifespan, and that it's more important sometimes to move it and spin it. And, instead of having these pie in the sky numbers. Greg and I were talking to some people down at Kansas City. They said they weren't selling their 16s on the port until it got to 750. Well, I think it's still sitting there. Now look at it, maybe inside.
Ash, I had a conversation with one of our suppliers today, basically saying that, with the log prices and what they can get in domestic market, it's, et cetera, that, they're really looking at they need 650 across the board on random for it to make sense to ship here. And, that's kind of okay on, 2x4 16s, but that's really tough on, 10s, 12s, and 14s.
I was talking to a guy yesterday, and I said, well, what do you got on 16s? And he's like 660 Cape. I'm like, well, what do you got on 12s and 14s? He's like 660 Cape. I'm like, holy shit. Okay.
That'll open up some room for the Eastern mills and the Western mills that have some fancier lumber that they want to sell, right?
I mean,
It opens up real estate for them to fill it.
If you can ship premium down there right now out of the East at 680, I mean,
or MSR. I mean, isn't most of the MSR you get out of the East pretty high quality stuff?
Yeah, it is. I mean, most of it, but it's heavy, right? So you ship 2,100 down there. You can only ship 24,000 unit or 24,000 foot trucks, which not a big deal, but it's just heavier shit moving around, right? But yeah.
So I think one of the things I love about this is, besides that, I love all you guys, and is in like talking through all this, it kind of helps me. It helps me sometimes to just, figure out what I really think. And I think the conclusion that I've come to is, right this minute, markets may be a lot closer to equilibrium than anything else, which, is maybe why, if I look at the futures market, it's been basically trading in a $20 range for the last 15, 16 trading days.
Yeah.
And so what we're really looking for is what's going to change. I mean, we know that seasonal consumption is going to ramp up. Is the production going to be, are the inventories in production there to meet that? That's the question. And I guess I'll go with you, Matt. My conclusion is no, they're not. That buyers should be using this lull in the market to extend their coverage.
I actually want to hear what Charles thinks about that, because I think Charles is pretty insightful, and he comes from the Yellow Pine, totally different production environment than what I'm dealing with, on me trying to buy a fall down item. What's your thoughts about what Gregg just said?
I think the whole market is inherently short and they're wishing it down. And I think equilibrium is we're closer to equilibrium than anything else as a whole. I don't care what the species is. And, when you get forced to make decisions, they're typically emotional and they're not strategic. So the longer you wait, I think the more medicine you're going to have to take as far as, what the outcome is on the other side. And if we get into a scenario where guys have to chase it because pine reacts a little bit faster than some of the stuff y'all deal in, it's going to get sporty quick.
Mm-hmm.
I like that
so
word,
it sounds
sporty.
Like,
that's a good. Yeah, go ahead, Matt. Sorry.
It just summarizing, it sounds like the four of us are kind of on the same page, thinking that the short term might be boring, but the long term is going to be more fun, and that we want to stay positioned for that. Our thinking is along those lines. What if we're wrong? Let's have the discussion about what if we're wrong, all four of us, and that this market goes down, steadily for the next 3 months, and we end up back at 450, 500 delivered type prices on studs. And
I'm already not having that much fun. Why
what would cause it? What are the potential causes of that, given what we're talking about? So we're talking about lower production, increased seasonal demand, less euro. We kind of made the case, right? So where would we be wrong? I always like to think about the contrarian, because sometimes we're wrong. We're not wrong all that often, but sometimes we're wrong. So what would be the contrarian viewpoint? Like, Ashley, pretend you're that guy talking it down $100. What are they saying?
Well, I think, look, this is why you stay hedged, right? This is why on the spruce and other items side, why you sit there in a market the other day and you had squishy prices on everything you're hedged on and the board moving up, and you're thinking to yourself, am I stupid? Why did I do that? And like Gregg goes, it's one day, right? And so if the prices go down, it sucks. You don't make as much money, but you're hedged and live to fight another day. And yeah, I mean, certain things happen you have no control over, or you didn't see why they go down, right? And to add one thing, like I had a guy tell me today, he wants to buy 2x6 104 and 5/8, $80 under today's price. I'm like, they're $80 undervalued now. So will the mills have production? They'll have production of something. Will they have production of the key items like the 2x4 104 and 5/8? 2x4, one item that's really cheap right now, I think are looking there 2x4 14s. Are they going to have enough 14s? Are they going to have enough 2x6 104 and 5/8? That shit's getting sneaky strong, and everybody keep looking for the same stuff all the time, right? So yeah, I mean, I guess that's why we position our, hey, in this business, you're wrong a lot, right?
Yeah.
It's and you just got to figure out how to turn that into, profit, right? But I mean, that's why we're hedged. I guess that's for Charles thing. Like, how do you position yourself, Charles, against the Southern Pine market selling off with inventory? You got an order file and that type of stuff, and you're careful. You look at charts all the time.
I mean, the biggest, you got to stay in it. You can't freeze, right? I mean, you got to trade into it and be liquid all the time, right? I mean, you look at what happened over the past 8 weeks, and you've got a scenario where guys were forward sold into Q1 at Q3 numbers, and maybe their inventory was just enough to kind of give them, a plus 20% consumption rate for the next 60 days getting into Q1. And then all of a sudden prices are $100 higher and they can't enter the market, right? Well, they can, but they don't trade through it. They don't continue to sell to capture some of that upside. And, look at how that affects long-term, big picture, the entirety of Q1, and be big picture perspective, and continue to move wood. Liquidity is your friend no matter what the market does. And our biggest inherent hedge is the fact that we have order files all the way out to June. And we also have a pretty substantial inventory that we continue to participate in the market moving forward day in and day out. And I think that's a big difference.
Yeah. Are you still relying on snail mail publications from the 70s to reach the forest products industry? It's time to upgrade. Advertise in the Lumber Word Podcast and get in front of the lumber world every single week. Our episodes are tuned in by the largest segment of influencers inside and adjacent to the forest product sector. Decision makers who shape the industry. Ditch those tens of thousands spent on outdated print ads and project your product or service across the podcast universe instead. Ready to make the switch? Head to thelumberchannel.com, click on Connect, and drop us a line with your info. Let's amplify your message today.
I mean, I guess the only thing I can think of is we're wrong on demand. So demand comes out lower, right? Just answering my own question here. If the market were to go down, it would be because demand softened or supply increased or both. And I certainly don't see the supply increase. Now, we might see that in the third and fourth quarter if we have a banger second quarter, but it takes a while, and it won't be across the board either. It won't be every region. It'll just be a few mills here and there, adding hours, adding shifts.
So I wanted to, the one thing I did want to talk about, Ash, was, we've had a lot of talk out of the government about housing, and I'd like to go on a stream of consciousness, if you guys would indulge me. They came out and said, we don't want institutional buyers buying single family homes. Dumb idea. Looks like it's not getting a lot of traction in Congress because it's a dumb idea. Buying down mortgage rates, smart idea. I'd like to see the execution on it. Anything that can be done to ease regulations, which is a big cost and a slowdown in building, that would be good. We got good news today in that the unemployment number came out better than expected, and wages are good. We talked about the three legs of housing: more income, lower interest rates, lower prices. We talk about the prices of homes, and in markets, there's some markets that they're down dramatically. Ash and I have been cruising, some of the Florida markets for, stuff. I mean, that stuff is super high beta, and those prices are down. Texas is down. Other areas in the South, the prices are down. You don't want to see a lot of price depreciation because that's a negative for people, right? But certainly nationally, I think we'll look at best prices are pretty flat. The other proposal on housing, stand by, is what they can do. No, that's not good. No. Check that.
Well, this is gonna sound kind of want-wit, but like, we have a problem with houses being in the right place, cheap enough for the right people. Like, Florida is great. Like, if you want to buy your second home or retire there, or 90 years old and have a lot of money and want to move there, right? And that's why those places sell off, because they build the snot out of them. They don't have a lot of stuff, and it costs $20,000 to get insurance on a $500,000 home there now, right? So a $500,000 home in Florida costs as much maintenance and to carry as $1 million house somewhere else, right? So as things start adjusting for price, they're adjusting for a reason, right? In a way, but how are we going to get houses? Like, I know the mortgage buy down and all that. How are we going to get houses affordable and I'm not talking about investors buying them. I'm talking about the guy that's a plumber or family that just got married and they're not 49 to 59 years old buying the first home for the first time. How are they going to buy a house?
Move to Bishopville, South Carolina. I mean,
no, Bishopville's fun, but I mean, like they want to live in Charlotte. They want to live in Dallas. They want to live in Houston. They want to live in Des Moines.
Affordable housing in Dallas is 2 hours from downtown Dallas now, right? I mean, I actually.
Oh,
he gone.
I got him.
Everybody's
Hey,
got
what's
a little
WIT
technical
want? Can you explain
today,
that?
fellas?
What's
Get
up
him back.
with
Can you
that?
explain WIT want to me? Because I'm just an Oregon guy. I don't know what it means.
Yeah, I was going to ask the same question, Matt.
Want wit. It's like Shakespearean.
What's that?
That's like Shakespearean for an idiot. I put it on my special list today. I said, we're moving 85 trucks today. Let me know your firm, and I'll say yes to or no to a counter, or give you a counter offer. I won't respond to want wit bids. I figured it was easier to put that than stupid. And the first thing a guy sends me over is a want wit bid on like 20 trucks. And I thought about how I wanted to respond to that, and then I'm like, nah, I'll just leave that set for a bit.
Just say no, thank you. Yeah.
But look at
hey, Greg, that non-farm payroll increase is pretty good for the view of the economy, the overhead view. It looks like things are improving a little bit for the average American. You feel like that helps the housing industry and the remodel and the crate and pallet type business? That seems to me like if there's just more money floating around out there that people are willing to spend on things, that it will.
Funny you should say that, Matt, because I was with Westbury last week. I know, I know you're a fan.
Oh yeah,
and
we text each other off camera from time to time.
He had to put up this amazing deal where, and Ash and I talked about this the other day. This is like when you think about this. So in 2007, the U.S. money supply was $7 trillion. What is it today?
Bigger.
I know the answer, so I'm not. You told me. I'm not going to answer.
It's 22 trillion today. So in the last 18 years, we've gone up 3x. And if you think back, there was a 40% increase in the money supply during 21 and 22 during COVID. And that's basically one of the. So you had the combination of way more money, and then we constricted supply, which is what laid the seeds for all the inflation that came through. The big disconnect I see today is people keep talking about affordability of things, and what they're really saying is, hey, we'd like prices to be what they were before all that happened.
That's true. No, that's you're absolutely right. And you actually had a point. And we looked at it. The money supply increased more in those 15 years than it did in the last 200 years.
Right. I mean, it's like
it's
all of history. We went to 7, and in 18 years we went 3x that. And that I mean, Westbury's points. That's partly what explains why the price of gold is 5,000 and silver is 100, and Bitcoin is more than 0, and
silver's only 85 right now.
It's better buy it. It's a value.
But
it also explains why like $1 billion goes through the Minneapolis airport in briefcases back to Somalia, right? Because there's just so much money around.
Whoa! We went there fast, didn't we?
Did I say that?
I don't think you can.
I mean, I try to go through the airport with $10,500 on, and they shake me down. That was great. That's a great stat. That's all M2 money too.
But like my thing on that, I go, okay, so like right now, I mean, I think in the last year, money supply is up 4%, and if you think about it, the way money supply is what allows the economy to grow. So money supply should really only grow at the same rate as the economy because it helps facilitate that. So we have all this excess money that was created over those years. And how is that's going to continue to reverberate through our economy over a long period of time until GDP catches up with it. I mean, money supply could be basically flat for the next 10 years but so what does that mean? I mean, I think it's a positive in that it means that, prices are going to be stable in general.
We need to get Brian back on here.
One other thing to add to that, you actually mentioned it Saturday when we were talking, Greg. So who benefited from that? Everybody that owned assets, stocks,
right?
Houses, is everybody that didn't own anything like that, right? And that's where you create that disparity between haves and have-nots.
The wealth gap.
So
the
wealth. One thing I had some notes while I was writing down because God, I've changed my mind every time we have this thing. Here's what I know. I know retailers have the lowest inventory on aggregate than they probably had in the last 3 years. I know that. I know wholesalers and distributors, many of them have the lowest inventory they've ever had. Why? Because they had bad years last year and they've pulled back. And I know that a lot of them last week were, as nervous as a long-tailed cat in a room full of rocking chairs trying to sell whatever they had at cost to move it because they had calls from hires up, right? I know business is good. It's steady. And I know people took business short last H2 of last year for H1 of this year. And I know they haven't covered it yet. So, and I know that the short funds are buying out of their stuff. So when I think of all that, if I had to bet on stuff, I'd bet on the market continuing to go higher for at least the next 30 days. And what would hurt the most amount of people the most right now? Greg, anybody know? Is it market going down or going up?
Up.
Yeah. I mean, I think if you had a sharp run up here, that would force a lot. I think going down makes it easy on the buyers. Yes, that's painful for the sellers, but the sellers it's already painful for producers right here, right? I mean, these numbers aren't great for them anyhow, right?
Yeah, going up $50 to $75 doesn't make them any money.
It doesn't get them back where they need to go. It just means they're losing less, right? I mean, and I think that's the thing is when we look, we talk about, hey, realistically, new production increases in production are probably deep in the second quarter to third quarter. If you get the price increases, if you go back down any here, you probably get more curtailment, right?
Yeah, I think you'll see permanent closures in some cases. I mean, I don't think there'll be curtailments on the next go around. I think all the free money's gone. It's all been spent. All the good COVID year stuff has been reinvested or spent. And now the losses are mounting up to a point where the banks are just going to say, hey, we can't do this anymore. Or the owners will just fold up shop and say, we can't do this anymore. It just doesn't make any sense. So, here we are at mid 500s, which is not profitable for most producers. What's the rest of the year going to look like? It's going to be interesting and fascinating to see how it unravels. I really like what you just said, Ashley, the way you said it. You left out a couple of things too, but
What did I
But-
leave? Go ahead. What did I jump in? Tell me what. Like I just threw the ones I
Well,
knew.
I mean, I've already talked about what I wanted to talk about on this. You know, I don't need to. There's nothing revolutionary I'm going to say that's going to change what you just said. And you're right. I believe in my heart of hearts that you're absolutely 100% right. I do think that there's another issue that is kind of, you're seeing it today. This is why the rail car business is slower. The wood's in the wrong place, right? So the wood that's needed in Texas might be in Florida, might be in Pennsylvania or Buffalo, or it might be in Prince George, or it might be sitting at Hampton Sawmill in Tillamook. It's not in Houston. It's not in Dallas. It's not at the Port of Houston or what's the other ports they use down in Port Arthur.
Mm-hmm.
And so, and so many people canceled their contracts or reduced their contracts last year that the mills have a fighting chance now to push back because they have less open market wood. Even with the reduced contracts, there's still an appetite for that lumber. It just gets traded on a transactional basis instead of a contract basis. And now they've had a nice run up in prices, and they're going to have to give some of it back here over the next week or two. But the smart sawmill sales manager is going to use this opportunity to clean up his tallies and get ready for the next wave. And the next wave is going to be better tallies and better prices, right? So by the time we get to the end of February into March, I fully expect that prices will be back on an incline, and that, you know, if you hadn't done your due diligence like today and tomorrow, if you hadn't been making offers and doing some cash transactional business, you're going to miss it. You'll just be lost. And then further on down the year, like in April or May, that's when you get total capitulation, when everybody just throws in the towel and says, screw it, I just have to buy now. I don't have a choice. And at that moment, I'm just going to be like, sell everything, get short the board, see what happens this summer, because you know that'll be the end of it.
I love it. It's like, like 3 weeks ago, we were like, sky's the limit. This thing's going to go. Last week, I think we left where, it was like we were kind of negative on the market, and I'm going off today, like, bulled up again. I love this.
We were negative. We were negative on the market because we were like, when you're selling and you don't have a couple of days of selling, you get frustrated, right? And you can sometimes mistake that for the quietness for weakness.
Mm-hmm.
And like, I don't think that people should mistake this quietness for weakness in this market, because it's. I mean.
And if you're a spruce trader, the March futures, which is 4 weeks away now, right, is $20-$25 over the cash market, and May's $50 over. So, you can lock in the highest price the market's traded at since the middle of last year.
And 2x4 is now a discount to 2x6, which it wasn't all of last year.
Right.
So there's some other things
point
going on, and 12s and 14s are highly undervalued, and 10s, if you can buy straight 10s and then find a chop saw and cut them to 1/16s, you can math that out too. So there's some angles going on here with 2x4 that, and then the final one is, like I said at the very beginning, if 2x4 number 2 or standard better prices fall down to the utility number 3 price, then a guy like me comes in and buys it all. I'll just take it all off the field.
Well, shit, man, aren't you getting close on some of the lengths that are undervalued? Like, what are 12 footers versus number 3?
No, not
now?
yet. But I mean, if based on what we're selling lumber for here, it's still another $50 to $80 a part on those lengths. I think 14s, like you said, are undervalued in number 2 and maybe a little overvalued in number 3 or utility, but they're not undervalued enough in number 2 where I could just go buy them and sub them. 12s is probably the closest one, honestly.
Yeah.
And, but I mean, dude, the world's changed. It's like, how many RFQs do you get every single day looking for trucks of 16s? And how many do you get of straight trucks of 12s? You kind of have to force the 12s into the market. You know what I mean?
By the way, just real quick aside, I was talking to a guy for a long time about the 16-foot situation. And he said, yeah, when he worked at a large lumber yard, they have their contracts, their 12, 14s, and 16-foot contracts on cars they get. And they go, a lot of times the customers just call out for 16s and they ship them out there because they don't want to cause any friction. And they just ship them. And a lot
Didn't
of
I
times,
say that like 2 weeks ago, 3 weeks ago?
Yeah. But no, that's why I'm saying it, because you after you brought that up, and we had a guy call us, or one of the listeners of the show sent us over, and I helped him do a breakdown of how much he would save using other lengths. And it's substantial, right? But then a lot of times people call out for 16s and they know that, and they still ship them lineal out there.
Yeah.
But like I said, back to the point, if people can buy 10s, 12, 8s, 10s, 12s, and 14s and ship more of them out there, it's amazing the amount of money you can save. And 8 and 16 footers last year were $80 premium, I think, for average on the whole year to random.
Mm.
Yeah, they've maintained a bigger premium. Matt, we were gonna go short today, and we ended up going long. Ash, you gotta go. You got that big meeting. You're gonna big meeting with the Merc today, right? You gotta roll.
Yeah. I'm heading
Give
down
him my
there
love.
All right.
Thanks,
boys.
guys. Always good. Cheers.
Y'all be good.
All right, thanks.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word Podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.